Hey guys, how's it going? It's Andy from Magoo Investing. Happy Wednesday. This week is going to be a very important week for the stock market as a majority of the S&P 500 stocks, the ones that actually move the overall market, are releasing earnings. At this point, we haven't had that many important earnings reports come out. We've had some stuff last week. We had Delta release some of their huge losses, and then yesterday we had United announce that they were losing $1.6 billion in the last quarter, and it's not going to be looking good anytime soon. And through the end of Monday, only 10% of the S&P 500 stocks had released earnings, and so far the earnings had been down 45% year over year. And so it's going to be very interesting to see how the market reacts to the rest of the earnings reports that come out during this week. Today, after the bell, pretty much right when this video is going to be released, we're going to have Microsoft and Tesla, which are going to be really interesting. I kind of expect Tesla to beat expectations because we've seen the ridiculous rise that the stock has had in the past couple months, and I expect that to continue. And if they don't, I expect the stock to fall out of the sky, and it's going to be very interesting. In today's video, I kind of wanted to look forward. If you look at the title, I'm talking about stocks to buy in August, and we're still in July. But the reasoning behind that is I've made plenty of videos on this channel talking about why, at this point, I'm pretty worried about the overall market. You have a lot of the things, the earnings reports that are going to be coming out this week that I'm kind of curious to see what happens, and then it's going to be the end of the CARES Act, and a lot of the unemployment benefits are going to be running out, and I'm very curious to see what happens to the overall market from that. So the whole idea of today's video is I'm going to be talking about 3 stocks that I'm targeting to buy in August if the market falls. These are stocks that I've had incredible runs so far in 2020, and at the current price, I don't feel super comfortable buying them. And so if the market falls or kind of stays pretty flat, I'm going to be looking to add them to my portfolio in the next month. Before getting started, I do have to say that I'm not a licensed financial advisor, and this is not financial advice. Anything you hear in this video is just me giving my own opinions on the stock market and talking about what I'm going to be doing with my own portfolio. And you need to do your own research before making any investment decisions. Also, if you've been enjoying these videos, I really appreciate it if you hit that like and subscribe button, as it would help my channel out a lot. With that out of the way, let's talk about the 3 tech stocks that I'm looking to buy in August of 2020. The first stock on today's list is actually one of my favorites. We're going to be talking about Snapchat, ticker symbol SNAP. Currently, Snap is trading for around $23, and it's up 43% year to date. The reason I wanted to talk about Snap today is they released earnings after the bell on Tuesday, and the market did not exactly like what they released. While most of the things that they released for their earnings was pretty good, they did have some misses on their forecast looking forward for their average users, and it pushed the stock down more than 11% at one point, and then it kind of settled down around 6% after hours. It makes a lot of sense. This is a company that is up significantly so far in 2020, and when you have a stock that kind of meets expectations and doesn't blow them out of the water, when it's this overextended, it makes sense that the stock is going to fall in price. And so that's one of the main reasons why it's added to this list, because it's a stock that I already own, and if I can add to my position size at a lower price, I will happily do that. One of the main numbers that Wall Street looked at, and is actually something that I personally look at, my goal for Snapchat in 2020 was for them to go profitable. And that's kind of the goal for a lot of these tech companies. I've talked about that in recent videos. And in the last quarter, they actually widened their loss to $325 million compared to $255 in the last quarter. So that was kind of a step in the wrong direction, and the market looked at that as a very negative thing and pushed it down double digits after hours. However, I did see a lot of positives. With their revenue, it increased 17% year over year. So that's a step in the right direction. It means their expenses are going up, but their revenue is also increasing at a similar pace. So I'm totally okay with that. I kind of feel like they kind of counteract, and while I want them to be profitable, a 17% year over year increase in earnings is very solid. And then the number that I always look at for Twitter and Snapchat specifically is daily average users. This shows how popular the product has been in the past quarter, and it shows the overall trends. And that was a 17% increase year over year, just shy of 240 million users. One of the things from the earnings report that stuck out to me is that they've seen steady increases in all of their markets. This is actually the second time that I've made a video right after a Snap earnings talking about what I was going to add to my position. I made a video back in February, and when I pointed out that video, there were some graphics that showed the distribution of daily average users and the year over year increase. And back in February, they saw more than a 30% increase in their rest of the world area, which was mainly from places like India. And so this shows the expansion potential of the company, and is where I think some of the differences that are going to make them profitable are going to be coming from in the future. At this point, the average revenue per daily user, which is a important tech metric to show how much money the average user is bringing in for the company, is lagging significantly in the rest of the world category compared to places like North America. It's over $4, and it's still under $2 in the rest of the world, and I'm hoping to see that increase in future quarters. And then the company kind of talked about their future quarter for quarter three and some of the problems that they might be seeing, mainly stuff with back to school, film releases, and sporting going on as kind of question marks that'll be their major factors for where the revenue is coming from, as I've made videos in the past talking about where Snapchat makes a lot of their money, and it's a lot of it from paying for these filters that everyone's using that make upwards of $100 million for a popular weekend. And so if you have film releases and sporting events not really happening, that could be a huge hit to revenue, but in the next quarter, I'm not as worried. I think this is a company that will only increase in popularity over time, and it's why it's going to be part of my portfolio for a long time going forward. And so in the next month, if we see the stock fall further than it did during the earnings report today, I'm likely going to be adding it to my portfolio for my long-term investment. So let me know what you guys think about Snapchat, ticker symbol SNAP, in the comment section down below. The next stock on this list is going to be Zynga, ticker symbol ZNGA. This is a stock that I've talked about a couple times as being one of the cheap stocks that I would love to have in my portfolio. And while I've never actually pulled the trigger and bought it, the company is currently trading for just below $10 and it's up 60% year to date. I just want to say that while I've been very positive on them overall, they've done pretty much exactly what I expected them to do. When I put up this chart right now, I'll show the importance of why I love technical analysis. This was some analysis that I did months ago. And as we've seen, the stock broke up to the upside above a resistance. And something I always say is that previous resistances often become the first tested support. So we saw that the stock pushed above that resistance, came back, retested it, and then pushed back up. And so retesting that support is where I would have entered my trade. Kind of forgot to put a alert on that one, so I missed out on that. But it shows the importance of technical analysis and how just a little bit of effort on the charts can make you significant gains in the future. Looking at the all-time chart, the company does look a little bit overextended right now, especially when you look at their PE ratio being in triple digits. That's the reason why I kind of have it targeted for this list, as it's not a buy right now, but if the overall market falls, I think it's in a great spot. And it's not strong enough to kind of resist the overall market pulling it down, so I expect it to fall with the market and be at a pretty good discount and something that I would like to add to my portfolio. While many companies have been cutting their guidance completely for the future quarters, Zynga has kind of done the opposite. They provided guidance for the next quarter and also increased their future projections for the next year for both earnings per share and revenue. One of the most impressive things I saw was when you look at the revenue, it dipped during the early 2010s, and since then it's just been steadily rising. This is a mobile games company that has done very well during the pandemic. Also, the fact that they don't have to rely on console sales as we're getting towards the end of the lifespan of the Xbox and PlayStation means that they don't have to worry about changing hardware, and they can just continue to produce what they've done in the past. They've made recent deals with a Turkish gaming company that they bought, and they've also had deals with stuff like Disney to produce a mobile Star Wars game. So they have a lot of potential going forward, and they have games like Candy Crush that have just been consistent revenue producers for the past 5 or 10 years at this point. When you look at some of the fundamentals, they have $1.3 billion in cash on hand, and they only have around $700 million when it comes to long-term debt. That is a ratio that I'm perfectly comfortable with and shows the overall security of this company going forward. So overall, Zynga has been killing it so far in 2020, and if the overall market falls, I will be targeting Zynga, and that's why I put it on the second on this list of tech stocks to buy in the next month if the market does fall. Let me know what you think about Zynga, ticker symbol ZNGA, in the comment section down below. All right, so far we've talked about two relatively small tech companies, especially price-wise. Now we're going to be talking about a big boy with Adobe, ticker symbol ADBE. Currently, Adobe is trading for $440, and it's up 35% year to date. When I think of the large tech stocks, Adobe might be one of the most attractive ones to me based off of their reliance on software sales overall. From their last earnings report in June, the company recorded record numbers of usage for their cloud software and a lot of their specific programs overall. And so the transition from working in an office environment to working at home has definitely benefited them overall. At this point, this is a company and a product that I use on an everyday basis, making videos for the past year and a half plus at this point. And so that goes based off of one of the factors that I look at for buying stocks for long-term investments. It has to be a company that I know how their basic business model operates and I use their product and enjoy it. That means I'll be more hesitant to sell my shares if the overall market falls. And so when you look at the all-time chart, it looks a little overextended. When I show the 5-year chart, you can see that it looks more stable, except for the fact that it's up 450% in the past 5 years. So it is definitely overextended right now, but the trend that we've seen from more working at home and the product they produce makes it very high on my stocks to buy list. They have a relatively high long-term debt of around $4 billion, but it's counteracted in $4 billion in cash on hand, so I'm not worried about that overall. Overall, Adobe is a stock that I love based off of their previous price movement and their product overall. And so right now the stock is definitely a little bit overextended, but I see a lot of potential in the future if the market falls and pulls it down with it. So overall, these are the 3 stocks I'm looking to target in August of 2020 if the overall market falls. Right now, they have done incredibly well so far in 2020, and as a result, I don't feel comfortable buying at these prices. So if the market drags them down, these will be the first 3 stocks I will be looking to add to my portfolio overall. And so far in 2020, tech stocks have been doing most of the heavy lifting when it comes to the market, and I'm kind of expecting the market to kind of give back some of those gains in the future. That's why I always think it's important to make a watch list going forward so that you can take advantage of daily movement in the overall stock market and add stocks to your long-term investment portfolio. And these are the 3 stocks I'm looking to target in the next month. Let me know what stocks you guys are looking to buy in the next month in the comment section down below. Thanks for watching this video. I appreciate all the support, and I will see you on Friday.